All right, welcome back everybody. My name's Austin. Today I want to share with you 5 Bitcoin charts / metrics / indicators. These are charts that we have shared with you on this channel before. Today I want to re-examine them. I want to update you and have an honest look at where the price of Bitcoin is today. Now, not all of these charts scream buy Bitcoin now, but many of these charts say that now wouldn't be the worst time. We also have announcements coming out of Cardano and coming out of LedgerX. So like the video, and let's start with the Bitcoin Mayer multiple. Introduced by Trace Mayer as a way to gauge the current price of Bitcoin against its long-range historical movements, the 200-day moving average, the Mayer multiple highlights when Bitcoin is overbought or oversold in the context for longer-term timeframes. And the calculation for this, the Mayer multiple is calculated by dividing the current Bitcoin price by the 200-day moving average of the price. Now, you read this any way that you want, you make your own decisions, but historically, the Mayer multiple has ranged all the way as high as over 13 back in 2011 when the market was severely overbought, to as low as almost 0 when the market was severely oversold. So usually the higher the Mayer multiple is, the more expensive relatively Bitcoin is and the better time it is to sell, or the lower the Mayer multiple is, the more oversold the price of Bitcoin is, and those might be a good time to buy. For example, back in the 2017 bull run, the Mayer multiple was 3.79, indicating Bitcoin was highly overpriced. At the time, it was $20,000. And of course, when we bottomed, when Bitcoin hit around 3,100 back at the end of 2018, beginning of 2019, the Mayer multiple went as low as 0.5, indicating that the price of Bitcoin was cheap, relatively speaking, and at this time, it was a pretty good time to buy. So if you are a hodler, this is a great metric to use, and let's look at where the Mayer multiple is for Bitcoin right now. Right now, we are at we're at a 0.977 Mayer multiple. So what does this mean? Well, ask the man, the legend himself, Trace Mayer, who was on the Off the Chain podcast 5 days ago. Let's see what he had to say.
Well, you can take that relative price and you can look at it over time and look at standard deviations. And so you can be like, okay, like if it's over 2.7, then it's expensive, relative, right? And if it's under like 0.6 or 0.7 or 0.8 really, then it's cheap. And, you know, if
and in between is what?
And in between is kind of fairly valued, you know, and
Interesting. So anything over 2.7 is expensive, it's overvalued. Anything below 0.8 is undervalued. And right now we are at 0.9. So right now, according to the Bitcoin Mayer multiple, the price of Bitcoin is fairly valued, but creeping into undervalued. Let me know how much credibility you put into the Mayer multiple. I think it's relatively credible, but moving on, next metric that I want to show you. And I'll be honest, this one's a little more bearish than bullish, in my opinion. We're looking on Messari for the real volume for Bitcoin in the entire crypto market. And right now, the real volume for Bitcoin is roughly $280,000. To me, this shows that we're really not seeing a lot of buying power stepping up right now. We might have a little bit farther down to go in the short term. I don't know. I mean, what does this mean to you when volume's still like this? To me, it would be a lot more bullish if the volume was a lot higher. But just to put it in perspective, long-term wise, we've never seen more hodlers, for Bitcoin specifically, more hodlers by time period. This is the age band for the amount of people that have held Bitcoin from all the way back in 2009 to today, 2019. The blue right here represents those wallets that have held Bitcoin for over 5 years. This blue right here, this green represents 3 to 5 years. This represents 2 to 3 years. And of course, we go down all the way to less than a day. The people that have held Bitcoin for their very first day, I respect that. So even though the volume is low, what does this chart right here, HODL Waves chart, what does this tell you? Well, to me, this shows that people that have been holding Bitcoin for 5 years or longer, that's never been higher than it is right now today. Also, if you look at this metric right here, these are the amount, this greenish metric, the amount of people that have been holding Bitcoin for 18 to 24 months Maybe that's a lot of you out there. For about 2 years now, this has never been stronger. And the last metric that has never been stronger, from what I'm seeing, is the 6 months to 12 months metric. There is a whole lot more hodlers that have held their Bitcoin for at least 12 months. So as a store of value, I mean, the utility for that with Bitcoin has never been stronger in that sense. But you know what? You tell me down below in the comments. The fourth metric / chart I want to show you, and just a recap, we are seeing a bullish mare multiple right now. We are seeing a bearish realized volume for Bitcoin. We're seeing I'd call it bullish HODL wave right now in 2019. And going to the Bitcoin difficulty ribbon, right now we are still seeing the beginnings of a bull market, indicating that the bull market has started. And if you're wondering, well, what is the Bitcoin difficulty ribbon? For those of you who subscribe to the channel, we were one of the first channels to show you Willy Woo's work. But just a reminder, the difficulty ribbon speaks to the impact of miners' sell pressure on the Bitcoin price action. So when network difficulty reduces its rate of climb, miners are going out of business, leaving only the strong miners who proportionally need to sell less of their coins to remain operational. This leads to less sell pressure and more room for bullish price action. Essentially, what this chart is saying is the best times to buy Bitcoin or zones are when the ribbons are compressed. So if we zoom in on January 2016 all the way to where we are today, we can see, based on miner sell pressure, when we're at great times to accumulate, when we're in more of the bear markets, and when were the great times to start taking profits, when we entered the bull markets. The narrow bands represent bear markets, the wider bands represent bull markets, and as we talked about, got to be over a month ago now, the bands are widening, indicating that yes, the bull market is starting. Of course, we've seen them close back up before, so take this as you will. To me, this is a small bullish indicator. To me, of course, if we're just going off miners, the hash rate, despite this little drop we saw right when the price of Bitcoin dropped to 8,000, the miners' hash rate has never been stronger. To me, indicating that these miners who are running a business here, they see strong bullish potential for the price of Bitcoin, or else they won't be mining. We'll see. You tell me. Of course, we've gone over this so many times. Bitcoin stock to flow model, which they use in gold, which they use in silver, only with Bitcoin. Since Bitcoin is a harder form of money, we know the flow that's being mined out of Bitcoin every 10 minutes, every block. This is very bullish. It's been about 95% accurate the first 10 years. According to the Bitcoin stock to flow, Bitcoin eventually will hit 100K in the next few years. Greater in the future years to come. If you want more insight on the Bitcoin stock to flow model, how it's predicting 100K in the next few years, yet not many people seem to be paying attention, watch this video right here. It really explains some insight from Plan B himself about why nobody's paying attention to this. Well, a few people are. If you subscribe to this channel, you are. But let me know what you think. Subscribe to the channel. As we get more information, I will keep you updated. But moving on, first piece of news, Facebook WhatsApp will have to share its messages with the UK. So an app that promises privacy is opening up its back doors to the UK government because the UK government strong-armed them. I like the perspective offered by Lance R. Vick. He said, the WhatsApp backdoor is now public and official. I have said this many times. There is no future for privacy or security tools that are centralized or proprietary. And why not? Well, if you can't decentralize it, then some government will strong-arm you for access, and that's what they're doing with WhatsApp right now, which is why, in my opinion, decentralized cryptocurrencies are way more valuable to me than semi-centralized or very centralized altcoins / other cryptocurrencies to me. And this is a real good example for why. Next piece of news, big green flag involving Cardano and New Balance. Cardano CEO Charles Hoskinson announced that New Balance will be using the Cardano blockchain to help authenticate its products. So this is going into supply chain management, VeChain territory, wabi, or now tail-esque territory. According to a September 28th article by Crypto Briefing, Charles Hoskinson, CEO of blockchain engineering startup IOHK, announced that American footwear brand New Balance will use the Cardano blockchain to allow its customers to verify the origins of a range of New Balance products. Wow. And honestly, the details of this partnership, I guess you'd call it, the details of this, they're not clear yet. I don't have this information. The minute that I get this information, I'll let you know. All we have right now is the promise of partnership or working together. If this is, I'm just surprised not more people are talking about this. Honestly, I'm going to do a little bit more digging, but keep in mind that Cardano and New Balance are planning to roll this program out globally. However, the current plans do not entail using the ADA token during this pilot. So it's a pilot test right now. ADA will not be utilized, but hey, maybe in the future. I'll let you know. Hoskinson reportedly made the partnership announcement during Cardano's second anniversary event at the Cardano Summit in Bulgaria's second largest city, Plovdiv. Pretty cool. I mean, this adds to the use case for sure. Last piece of news, LedgerX claims personal animus, personal bias, drove ex-CFTC chair to stall approvals. So according to LedgerX, they now have proof that the reason, or part of the reason, that the CFTC kept pushing back and pushing off Bitcoin ETFs, anything related pro-crypto, the reason was, according to LedgerX, that the CFTC had personal bias against them. How do they know? According to two letters obtained by CoinDesk via the Freedom of Information Act request, LedgerX believes former CFTC chairman J. Christopher Giancarlo was personally biased against the company and improperly used his position to delay the approval of an amended derivatives clearing organization registration. So the reason they're claiming this, because of letters that they uncovered from the Freedom of Information Act, the CFTC ex-chair Giancarlo could not immediately be reached for comment. We will update this article if we hear back. But LedgerX CEO Paul Chow told CoinDesk that he confirmed that the letters were accurate and consists of only some of the messages sent to the agency. I'm not going to read you these letters, but they're pretty biased against LedgerX, and this could be part of the reason why we're seeing these delays. Let me know what you think. If we get, and when we get more information, I will let you know. But that is the video. Like always, I'll see you tomorrow.